Hello, it's me. I was wondering if you want to analyze BTC. Let's go over my strategy so we can make some money over time. That's a song that I've been working on for a really long time now. You guys might have heard it in some other videos before. I was thinking of calling this song, I don't believe in plagiarism, first of all, okay? You always have to be original with your work. But I was thinking of calling that song, Hello? I think Hello would be a really good title. Wouldn't you guys agree with me? Like, Hello would be the perfect title for that song. As you guys know, I have bought a lot of new computers, right? Lots of new computers, and I figured, hey, because I'm writing a song called Hello, I want a computer that sings to me, so I thought that I would buy the brand Adele. That'd be perfect, right? Buy the brand's Adele, and it can play back the song Hello to me. Okay guys, let's get into this technical analysis. I was actually in between my little teaser trailer, now I was actually gone for a little bit here. So, regardless of how people draw it, whether they draw this as W, X, or Y, which makes an ABC in here, okay, an ABC in there like that, right? Or they simply draw it as this is one big A like that, and within here, this makes ABC. I will accept both ways. Both annotations are perfectly fine to me, because all that really matters is if this made a flat right in here, I would accept it because this is it denotes the C position over here, which now marks the end of the correction, right? Which makes a lot of sense to me. So regardless of which way that I've seen a lot of professional traders draw it, absolutely acceptable, as long as we come to the same consensus that this point right here is now the end of the the end of the correction, and now we are attempting to make an impulse wave. Now we have to make note, first of all, that this is a fairly bullish correction. I'm not bullish yet at all, but we have to acknowledge that a 382 level is a much more bullish correction than a 0.5 or 618, and we also have to acknowledge that this right here can be seen as an impulse wave up because it retraced high. We're talking about higher than the golden zone. If it was a really dinky uptrend, we would have hit, a 382, maybe 0.5, not even 618 Fibonacci level. But because we're hitting well over the golden ratio of 618 over here, it's actually a very good bullish sign as well in the market, where the market is starting to get generally interested in it. Now, let's go to CoinMarketCap very quickly, first of all. So what we see in CoinMarketCap is that the volume is pretty decent. Market cap is at $443,000 right now. And if we look at the 24-hour volume, we notice that today it's at $7 billion. Yesterday, 6.9, day before 6.9, day before 7.2. So we're actually picking up in volume, right? Compared to the previous days, like at 5.7, 6.91, right? Yeah, sure, it's not nearly as much as the February 23rd, 24th, or sorry, 20th to the 23rd, right? But the 20th to the 23rd, that was a pretty big uptrend going that way. I think we are picking up a little bit of steam, not quite that much steam yet. And here, I want to talk about two different variations for us to draw it. Let's say we drew this as 1, 2, this was basically 3, 4, and all of that is 5, right? That's one way that people would be drawing it, and then they would draw this as a simple ABC, right? A, B, and a C, like that, okay? That's definitely one way to be drawing it. All right. The way that I originally drew it was like this, which now I think it's actually wrong. The way I drew it is actually wrong because I just don't think it's proportional, guys. So let's say I drew it like that. When we get an expanded flat, I just cannot see it. Yeah, it's not really right to me, okay? I can't really see it like that. So now I digress with this particular thesis of mine, and this right here seems to make a lot more sense to me. And we're going to go over a lot of risk management examples as well in here, specifically from my case. And yeah, so what we have to acknowledge is that this is actually a really nice retracement, okay? If we look at this retracement right here, as I mentioned earlier, we're looking at about a 382 Fibonacci level, right? Right around the 382 Fib level. And in this one here, I was recommending that people get interested at a fairly low price in this region right here. Somewhere in between, right here. But it didn't quite reach that zone, guys, to be quite honest, right? It didn't quite reach that zone. It missed it by about $30, which is still okay, right? It's not going to hit the mark exactly all the time, right? It just, things like that just simply don't happen. But I don't think we are quite done yet. But even if we are, it doesn't matter because I'm getting ready. In a very short term, I'm fairly bull biased, and because I'm bull biased, I'm going to get ready to play a position. So the way that I think this is working right now is like this. I'm going to break it down on the 15-minute chart. Now that I've changed up my counting to 1, 2, 3, this is 4, and this basically, this whole region is 5. Right here. 5 with the truncated fifth wave, right? A double bottom, we can call it. And then what ended up happening was this made an ABC, just like that. And now, I don't know 100% if this is over yet, okay? Because the way I'm counting this right now is 1, 2, is this 3, is this 4, is this 5, like that? Or is it like this, where this is 1, 2, all of this is 3, and this is 4, and there's one more coming down. So because of the uncertainty with this count at this given time, what I end up adopting is a dollar cost averaging technique strategy. And what that basically is a way of micro buying. You buy in very small amounts because you get the best base price by getting the best dollar cost average, right? The biggest mistake that people can make is to buy it from one specific position only. So if you guys believe that it's the bottom and you're market executing and just buying from one position, horrible thing to do, guys. What you want to do is you want to stack your buys because it gives you the best price. Because if you don't do that, what ends up happening is if you only buy from this position, say right here, and then it keeps going down and down and down and down, well, you kind of screwed yourself, right? At least if you ladder your buys, right, you're just buying it. When it comes down a little bit, great. Then if it goes up and it's not even close to your position size that you want, after you do your position size calculations, great. You can actually buy going up as well. So that's one way to look at it. And I'm going to go over some specific scenarios. So we didn't actually hit this zone, but what I ended up doing was I've been accumulating already. I'm going to be playing some swing positions that I'll talk about very loosely, not too specific. I started buying under 10,300. Very small amount, and I'm not going to talk about my exact position size because that's how you get banned. Or sorry, that's how you get hacked. So not happening anymore, guys. So I will be interested in buying when it gets to, you know, 10,200, 10,150, right? I'll be interested in buying it along all these zones. And I'll be especially interested in buying more when it breaks above the 55 EMA. So I'll be interested in buying around, say, 10,500 if it breaks above it. Maybe 10,400, depending on where the moving average is at that time as well. So let's just say that it ends up correcting a little bit more hypothetically, right? I mean, if it does correct hypothetically more, we have to remember the Elliott wave rules. The Elliott wave rule states that wave 3 is often the longest and never the shortest, okay? If it is often the longest and never the shortest, what we will do is automatically assume that wave 3 is longer than wave 1. So if this was indeed the correction that could happen even in a worst case scenario where, you know, we get an ABC correction down to the 9,000 ranges, let's take a look at it, okay? Let's take a look at the very conservative one where it does go down to about 9.6 or 9,665, or sorry, 9,965, right? And I don't mind. Okay, let's just get rid of this and play out the worst case scenario right now. Let's just choose some very specific buy ranges, okay? We'll buy it at the 0.5 Fibonacci level, and we'll buy in between here as well But first of all, before we can do this, we have to acknowledge our swing low position, okay? Where is our swing low position? Well, our swing low position is most likely going to be, you know what, I can't really see it retracing more than here. So I'm actually going to move this up right here, 10,100-ish, and I would choose my swing low position, which is the lowest point, is around right here, okay? Like literally like around the 0.4 region. But more so wave 1, okay? It might even be over here. Okay, 9,000, whatever this is down here, 9,200-ish. That could be one of my positions. So now let's say that I acknowledge that it could possibly retrace to the 618 region. And let's say we acknowledge that wave 2 cannot retrace by more than 100% of wave 1. Otherwise, we consider it a wave failure. Now, let's just say that we choose this area right here as our stop loss, okay? And a lot of these things are very important for you guys to consider when you're developing a strategy. Now, let's say that we are going to buy at the absolute maximum right around this region, 9965. Okay, we'll see, we'll buy it there. So boom, we'll end up creating a ladder there as well. But here we'll buy bigger quantities. So now I'm setting myself up for 5 ladder possible buys, right? And we assume that wave 3 is often the longest and never the shortest. And let's just say it retraces to about the 618 region. That what we'll automatically target is a minimum of a 1-to-1 extension, right? And then the next target would be even higher than that. So yeah, so let's just say we end up choosing the middle, okay? Because we're going to assume it's a fairly good retracement. People are generally interested and we're bullish biased. Let's just choose right in the middle here, which I normally don't do, as you guys know. I normally choose a more conservative approach. Actually, I should probably stick to my conservative approach, just around there. Now I enter into my long position, right? But we don't know what our exact entry price is, right? That's what we're trying to figure out right now. So let's say we've got a few different buys here. And this is my Excel sheet, guys, right here. I'm not sharing this Excel sheet, just so you guys know, in case a lot of people are asking me. I've shared it too many times, and people keep asking over and over where it is, right? I've plastered it on the internet everywhere. So yeah, I'm just not sharing anymore because it's everywhere on the internet, and people have to learn where to find information, especially when it comes to my end, because I simply don't have the time to be replying to every single person to point them out to where to find it. You guys have to make sure you guys are also staying on top of my social media stuff, right? Yeah, but if you guys want me to email it to you, I'm gonna simply charge $100, honestly, to email it to you guys, or to put it up on a downloadable link or something like that. So this is my dollar cost averaging sheet that has probability calculators, weighted calculators on there, has my index of low risk, high risk, and sorry, my low risk stuff, high risk, my risk index as well. I've got a bunch of long-term predictions, just lots of risk, guys. I always say that risk is the #1 thing to focus on. How do you guys manage to keep your money if you can't even manage your money, right? You have to make sure you know how to keep your money and manage your money if you want to make more money as well. So a lot of people make the mistake of just jumping into charts, you know, stop loss, whatever. But if you guys don't even know how to manage your risk, you can't really, you know, make money. So here we're going to choose our point at 10,300, which I entered, and then 10,250, and then what, I'm just going to write them all in actually. So it was 10,300, 10,050, 1,000 there, and this one was 76 actually. This one is about, excuse me, I'll choose right in the middle actually for this one, which will be 10,072. 10,072, and the last one is 9965. Okay, so let's just say we're micro buying 0.5 Bitcoin each time, right? If we bought 0.5 Bitcoins each time and it fell to these levels right here, what we would be spending, actually I'll make a more reasonable amount so a lot more people can relate to it as well here. Let's say you're now buying it, you're micro buying in these laddered lines that I drew for myself here, which is my intention. Okay, now once I actually get it all filled, 0.25 with all limit orders, and assuming I keep my 0% fee, people always ask me, why do you have 0% fees? It's because I trade a heavy volume every month. Once you trade a high volume a month, on bitfinex, it's over $7.5 million in volume, not what you have. Keep that in mind, okay? You can reduce your fees. So that's why I have 0% limit order fees. So now, if I'm buying in these positions right here, actually, who am I kidding? I probably buy 0.5 in here, and I buy 0.5 in there, okay? I want to buy more as I believe it is about to turn. So if it gets to possibly these ranges, I'll have accumulated a total of, for example, 1.75 Bitcoin, right? I'm almost doubling up as it gets lower, okay? And now my total position size will be $11,700. But the important thing is your average price, okay? The average price would be $10,114. And we also have to know where our target is. So the target is probably going to be somewhere a little bit higher than it. So I'm going to go for, let's just be conservative, 12K as our first target. So if we keep our target conservative at 12K, and now our entry price based on dollar cost averaging is actually right around here, the 10,114, then hey, I'm gonna put this right in here. I'm gonna choose for my swing low right there. I'm gonna enter at $10,114. My swing low position is going to be about 9,281, right? And then my target will be roughly 12K, literally 12,000. Okay, and now what do we get? We get a risk to reward ratio of 2.26. So now I'm going to go back to my spreadsheet here. Okay, so this automatically populates. This is my total averaging price, right? Which ends up going to here. Now my target price is about $12,000. My stop loss is at 9,281, I believe, right? 9,281, 9,281. So then I see my risk to reward right here of 2.26, which also auto-populates this entire field for me as well, which I'm going to drag and drop to you guys on the other screen there. So what we see easily here, see, this is why, guys, it's impossible to copy my trades. Like people are always asking me like, oh, can we copy your trades? Can we copy your trades? No, you guys just simply cannot copy the trades because, some people may not have the same type of skills. I play the game like a game of probability in casino, right? That's honestly all that I see this as. I make sure that I understand all probability, guys, all game of casino, and that we focus on winning over time. So I asked myself, if I do a dollar cost averaging analysis on here, is this a really good scenario to set up? Yeah, but you guys can't expect to be in the same type of position as I am, because I'll have bought in small ways over time, differently than you guys, right? So we have to make sure we understand the risk and the rewards associated with this. So just to give you guys an example of how this would work if we were to roll a dice, for example. So I'm going to talk to you guys about something that I like to use an example. And it's an example of flip a coin, okay? It's a flip a coin scenario where you're simply flipping a coin, heads or tails. And then your buddy says to you, well, actually, we're going to use exact scenario, okay? We're going to use exact scenario, and you guys are playing a position size of $11,700, right? Now, every time actually, that doesn't really make too much sense either. We're gonna play a heads or tails scenario, and you can win 50% of the time, and you can lose 50% of the time. And now your risk to reward is 2.26. So your buddy says to you, okay, every time you win, I will actually give you 2.26 times more than whatever you bet. So if you're betting $1,000, for example, he will give you she will give you $226 every time you win. And every time you lose, you actually owe that person $100. Now ask yourself, is this a good trade to take if you played it over time? And the answer is absolutely. It would be a wonderful setup to take every time. Now I got a bunch of this stuff as well that auto-populates. So I'm just gonna put this in here, and we're gonna go over a quick heads or tails scenario. I love my spreadsheet, guys. I've spent so much time on it that you guys should probably spend a lot of time as well on working on a spreadsheet. And I really mean it, guys, that if you guys don't understand the math behind trading, and you don't understand the risk involved, you're just going to be trading with emotion. And when you're trading with emotion, it's not a good way to trade, guys. It really is a horrible way to trade, because now you're just playing the guessing game. And when you're playing the guessing game, unfortunately, you're going to end up losing a lot more than you win. So make sure that you guys understand risk management, okay? I'm going to link it at the end of this video. I've got many different types of risk management videos, and you guys need to know that I can't emphasize how important it is, guys. Every time I make a risk management video, it gets the least amount of views. And it gets the least amount of views because nobody is interested in learning this part of the game. And keep in mind, guys, that I'm Asian, and I believe in Asian level mathematics, okay? And if I can't do Asian level mathematics, then I simply pull out Eric Cho that I keep in my pocket all the time, and at least I've got another Asian guy to do my math for me, right? But in all seriousness, that you guys have to understand, please, I don't know how to say it enough times, guys. Please spend time studying risk management, okay? You need to understand the math behind this. Just please beat it into your heads however you need to. This is the most important part of trading. This is what separates the men from the rest, from the boys, and then from the adults, you know, from the kids and the adults. If you guys understand risk management, you'll be able to nail down this math and understand that over time, we focus on winning. We never care about winning one specific trade. Yes, it is important, but what we see each trade as is a tiny little battle. And you guys have heard it many times that he may have won the battle, but the war has just begun, right? You guys know what I'm talking about? Think of each trade as a tiny little battle, and there's a massive war ongoing. And the massive war is like a marathon, not a sprint. Think of each trade that you make as just a simple little sprint of a marathon, okay? And there's many different events of this marathon, and you guys need to make sure that you're staying in the game over the long haul. If you're one of those traders that are simply trading and hoping that you're gonna win every single time, guys, stop trading. Because as long as I've been trading, guys, I do not win every single time. Trust me, far from it. Any trader who says they have a 95% win rate, they could literally just go, like, just shove it up there, you know, whatever. Just, you know, stick their foot in their mouth, I meant to say. Because it is not true that these guys are trading with a 90% win rate. Okay there, you know, the people who manage their risks very well, you know, we're talking like 50, 60, 70%, like at most, right? 75 and 80%, you're a really good trader then, okay? Well, what is this there, guys? Do you guys see this right there? Do you guys see that? How do I get rid of this? This is driving me bonkers. How do I get rid of this right here? Oh, it disappeared. Did you guys see that as well? Or was that just like my mind playing with me right there? I gotta watch this video again because I thought I saw like a little style thing there. And I was looking back and forth on my other monitors, and then I looked back and it simply disappeared. Did you guys see that? Really? My eyes are playing tricks on me, right? You guys are playing I know you guys are playing a joke on me, I know it. Anyways, so now we have a position size of what we're playing is what we saw in here earlier, 1.75 Bitcoin. We averaged that our price to be exactly 17,700, right? Now, what the heck just happened? No! Guys, someone's like screwing around with me right now. I kid you not. It's okay, guys. I'm getting it back. I'm getting it back. You guys probably think I'm like drunk right now. I know. Okay, so our risk to reward ratio for this specific setup with this laddering technique is about 2.26. So my entry is exactly at $10,114, right? And my target is actually not 10,000 there. It's actually 12,000. My target is $12,000. I've got a chance to gain now a pretty good amount. That is not right either. Our gain amount is actually C21. Chance to gain C21. Wrong field here. Let's make sure that we get this in here right. My target is actually C15. C15. There we go. This is much more acceptable now. I always find little mistakes in my spreadsheet sometimes. There we go. So risk to reward, 2.21. Entry, 10,000. That number there. Target, 12K. Stop loss, our swing low. For wave failure of Elliott wave, retracing 100%. Chance to gain, 18.6%. Chance to lose, 8.28%, right? And now if we play heads or tails every time, and your buddy says to you, okay, 50% win, right? And I'm going to give you whatever you want to bet, but I'm only going to let you win 18.6% of your money for whatever you play. So I'm like, okay, I'm going to play a position size of $17,700. But if you lose, he says, well, if you win, you're going to win 2.26 times more than you lose. So, 2.26, we do the math, simply 8.28 multiplied by 2.26 is equal to 18.6, right? That's what a risk to reward ratio of 2.26 means. It means you can win 2.26 times more than you lose. So now, for each win, obviously, if you take 18.6% of 17.7K, it's now 3,293. So what we're doing is we're playing over 10 games, by the way, okay? I want to make that very clear right here. Heads or tails, 10 games. Right there. Heads or tails, 10 games, right? Oh, that's so irritating how it's deleting, guys. Okay, there we go. Heads or tails, 10 games. And then if you lose 8.28%, which is now 1,465, right? So over 5 games, you would win a total at winning 32.93 each. Wow, it moved all the way here. Do you guys see this over here? Cool, right? You'd be winning a total of 16,465. And now your total losses at 5 games would be $7,327, right? So your net profit is simply your total wins minus your total losses. So if you guys took this trade setup, for example, every single time over 10 games with a risk to reward ratio of 2.26 with the exact same position size of about 17.7K over 10 games, you'd come out ahead, $9,138. So are we crazy for wanting to take the setup? No, definitely not. And this is even a conservative target as well. The normal target would more so be around 12.9, right? 12.9 would be a really good target. That's a possible 27.37% gain. So now we're looking at a simple, super duper simple risk to reward ratio of about 3.32, right? So yeah, so I'm going to be listing these specific setups on Twitter, I guess. But if you guys take these setups without understanding this video and the math behind it, you guys might be losing a lot of money, right? You can't just follow a chart blindly. You got to understand how to read a chart as well, and how to interpret it, and how to manage the risk and know the math behind it especially, right? So I just want to leave you guys with my quick thoughts there with how I manage risk and what I plan to do. So it's a little bit of a detailed video, but I thought it was absolutely necessary. I do believe that these are going to be one of the targets that it will most likely hit, right? Just somewhere right around here. And I'll be sure to post these charts on Steemit and on Twitter as well. So guys, before we go, make sure you guys go to Steemit and upvote it. I would really appreciate your support. It is how I'm going to keep everything free, guys. Sure, I brought up some paid content. I don't really plan to follow up with it, guys. You guys know me better than that. I am so freaking lazy. There's no way I'm going to try to make any type of paid content. I'd rather, how do I get paid for doing this kind of stuff for you guys to accommodate for some of my time? The free methods that doesn't cost you guys anything. And the free methods would be to, first of all, monetize YouTube, which is only fair, right? If I'm making the videos and I've created the content, of course I'll monetize it, right? And you guys just have to be patient with me, and it costs nothing but your time. So the only thing I would ever ask from you guys is literally your time, You guys should like spam all those ads as they come up on your phone, and so I can make like a 1,000th of a dollar. And then the second way of monetizing how I actually get paid for doing this online is through Steemit. So make sure you guys go to Steemit. I would really appreciate you guys upvoting it on there. And if you guys truly and absolutely love what I'm doing, you guys are welcome to donate to the cryptocurrency piggy bank. So those are the 3 ways that I will always try to keep my content for free, just by monetizing it those 3 ways. YouTube, Steam it, and hey, if you guys ever want to donate because you feel I'm doing an awesome job, awesome. If you don't, no worries. But all that matters is it comes from a level of respect, right? I respect you guys respect me, and that's when we keep this content free. So other than that, guys, you have yourself a wonderful night. I hope that this risk analysis video has given you a little bit of more of an insight of how some people manage risk. It's a very different level than just buying and selling, right, guys? You have to make sure you understand these numbers. So other than that, guys, have yourself a great night, and thank you very much for your support and for your love, and I look forward to see you guys down the road. Bye now.